Hello guys, welcome back. So today we're going to talk about how to effectively trade the FOMC news driver. Now, what some people do, they just dive into their charts and gamble once it's FOMC or any high news driver like FOMC, like NFP and CPI, the likes of it. But today we are going to learn how to effectively trade the FOMC without gambling. Now, you don't really have to know where the market direction is going, whether we're going up or whether we're going down. You don't have to know all of that. You don't have to know bias. You don't need any of this. But I'm going to teach you exactly how you can trade the news. Now, for this example, we're going to use the very last FOMC news, which was on the 14th of June 2023. Now, the time on my Forex factory, like you can see here, is United States time. So the news is by 2 p.m. Now, I want you to look carefully. By 2 p.m., we have 3 red envelopes, including the FOMC statements. And then by 2:30, we have another news entirely, which is the FOMC press conference. Now, here is where the job comes in. I want us to dive right into our chart without wasting time here. So, this is how you do it. If you look at the dates on this chart, I want you to look down here. Yeah, that is Wednesday, 14th of June. It's the same date that we have here. So taking my chart back to that very day so we can study it and see exactly how we could have traded it. Now, by 2 p.m. on that very day, I want you to look at this time here. The bottom line is 1400, which is the same as 2 p.m. Now, by 2 p.m., remember, we're using the United States New York local time. By 2 p.m., we had the news driver FOMC statement, and then on euro dollar, this very pair is euro dollar, we had a sell candle. Yes, so which means the news driver brought the market to the downside, and then here was the low that was made before returning back up. So by 2 p.m. we had a sell profile down to 208, and then we had some consolidation before going back up. Now, this is how exactly you trade this news. Remember, by 2 p.m. we had the FOMC press conference, and then by 2:30 here we have the FOMC statement rather, and then by 2:20 we have the FOMC press conference. So the FOMC news comes in two phases, the one by 2 p.m. and the one by 2:30 p.m. You want to understand that the one that comes by 2 p.m. is the fake move. You don't want to be trading by 2 p.m. So once the FOMC news comes out by 2 p.m., you're doing nothing. While others are buying and selling and blowing off accounts, you are neutral. You are off the charts. You're just observing so that you know your next move. Now, in this case, because we had a sell profile, we are going to trade on the opposite direction. Remember, when the news comes out, you're not doing anything. In fact, you're doing opposite of what the initial move is by 2:30. So in case we have a sell by 2 p.m., by 2:30 we'll be bracing ourselves up for a buy, because this is how it is. This is how the algorithm operates, and this gives you over 90% win rate. And we're going to go through by using these examples. I'm going to show you different pairs, euro dollar, GBP dollar, and some other pairs. Now let's take this for example. We had a sell by 2 p.m. We made a low, and then we started consolidating till when? 2:30 p.m. Look at the time, 2:30 p.m. Look down here, 2:30. So by 2:30 we could buy the market because we had a sell. Remember, we are always trading on the opposite direction of the first move. If we have a sell, then the next move we are going to buy. If we had a buy, the next move we are going to sell. So by 2:30 we are going to buy this market whenever we have the news, in case we have a sell profile. So by 2:30 we had a buy here in case we bought this market, and we can of course sell around here. How do you project where to enter and when to take profit. Now, at this stage, you might not know exactly why these candles are coming back down, but this will be a very little drawdown. So in case you buy here, your stop loss should be the lowest low that was made by the news. So we're buying here and we're putting our stop loss right below this low. Did price get to that stop loss? No. Did it get to our take profit? Yes, it did. So we're going to use this as our first TP and this as our second TP. Now, why are we framing this and this as our take profits? Here's the thing. Once you have that big move from this top to this bottom, you're going to use your Fibonacci tool to measure the whole move. I'm going to do that right now from here down to this place right here. Now, that is the full move. Now, the 50% of it, once price gets there, we want to be taking partials, our first profits. And that's why I'm annotating that with this line. I see you're seeing 50% of the initial news from here to here. We can use your Fibonacci tool to get the 50% of that. So once price gets there, you want to be taking partials. And then the next place to take partials is once price gets to this level. What is this level? It's 50% of this fair value gap. A fair value gap is when we have three candles, candle 1, candle 2, candles 3, and then there's a gap between it. The 50% of it, that is the midpoint of the fair value gap. So I'm going to measure this from here down to here. Now remember, I'm using this candle. So 50% is the 50% of this fair value gap. So that is where you can put your second partial or your full profits. Did you make profits here? Yes, you did. How many pips was the stop loss? Let's check. Look here, right here. 10 pips was our stop loss. How many pips did you make as profit? Look here. 30 pips. Total profits. So it works on all asset class, regardless of what you're trading, but it has to have United States dollar as part of the pair. For example, Euro dollar, GBP dollar, we have gold dollar, we have Euro USD, we have New Zealand USD, and I have some other examples here, but I want to keep this video very short. For example, GBP USD over here. This is 2 p.m. Yes, and then by 2:30 here we can be a buyer, and then our first profit here, our second profit here. That's another example. And for gold, yeah, the same thing. This is 2 p.m. and then this is 2:30. We'll buy here and then our profit here. Did we make profit? Yes, we did. And then the final example I'm going to show you is the third one rather. It's USD-JPY. This is 2 p.m. There was a bullish move by 2 p.m. and then by 2:30, what are we going to frame? A bullish or a bearish move? Yes, you guessed right, a bearish move, the opposite direction. And then here's 2:30, a bearish move. Look, I'll take profit here. And then finally, the final example, New Zealand USD. 2:30, we had a bearish move. 2 p.m. rather, we had a bearish move, and then by 2:30, right here, we had a bullish move. So I don't want you to take my word for it. I want you to go into your chart, study each FOMC news for the past 6 months, and look at how it behaves. If what I'm saying is correct or not, study your data, and then you can come back and thank me later. I hope you find this one insightful, and if you enjoyed this video and you want me to make more videos regarding trading and things similar to this, I want you to give this video a thumbs up. I want you to subscribe. I want you to comment and like. Until I talk to you next time, I wish you good luck and be safe.